April the 17th, 1837, Hartford, Connecticut. A boy is born into wealth, privilege, and connections that most Americans will never see. His grandfather co-founded Aetna Insurance. His father is building an international banking empire in London. The boy's name is John Pierpont Morgan, and by the time he dies, 76 years later, he won't just be rich. He'll control more of America than any president, any general, any politician ever has. He'll own the railroads, the steel, the electricity, the banks. He'll decide which companies live and which die, which industries merge and which compete, who gets credit and who gets destroyed. And he'll do it all quietly. No armies, no elections, just money. Pure, concentrated financial power, wielded by one man who understood something the rest of America didn't. Control the credit, control everything. This is the story of how J.P. Morgan took over America. Not through force, but through a system so sophisticated that most people never even realized it happened. A system where crises became opportunities, where rescuing the economy meant consolidating power, where saving America actually meant owning it. And here's what should terrify you. The system Morgan built didn't die with him in 1913. It evolved, it grew, and it controls your life right now in 2025. Let me show you exactly how he did it. October 1907. New York City is in full panic. The stock market has crashed. Banks are failing across America. Depositors are lined up in the streets, desperate to withdraw their money before their banks collapse. The call money rate, what speculators pay to borrow money overnight, hits 125%. 125% for a single day. The entire American financial system is on the edge of total collapse. And there's no Federal Reserve, no central bank, no lender of last resort. Just thousands of independent banks, all connected, all failing together like dominoes. The government is powerless. President Theodore Roosevelt watches from Washington. Treasury Secretary George Cortelyou tries depositing $25 million in Treasury funds into New York banks. It's not enough. The panic spreads, and then J.P. Morgan steps in. Morgan is 70 years old. He's semi-retired. He's been focused on collecting art, not running banks. But when the panic hits, every banker in New York knows there's only one man who can stop it. Morgan has the money, the connections, the authority, and most importantly, the will to force everyone else to do what needs to be done. On Saturday, November 2nd, 1907, Morgan summons the presidents of New York's trust companies to his private library on East 36th Street. This is the legendary Black Library, lined floor to ceiling with rare books and manuscripts, paintings by old masters, artifacts worth millions. But tonight, it's not about art. It's about power. Morgan locks the doors, literally. The trust company presidents are trapped inside. Morgan tells them the Trust Company of America and Lincoln Trust are on the verge of collapse. If they fail, the entire trust system fails. And if the trust system fails, the banks follow. The economy dies. The trust presidents don't want to pool their resources. Each one is thinking about his own institution, his own survival. But Morgan doesn't give them a choice. He keeps them locked in the library until 4 hours in the morning, until every single one agrees to contribute money to save the failing trusts. Benjamin Strong, one of Morgan's young associates, who would later become the first governor of the New York Federal Reserve, examines the Trust Company of America's books. He reports back. The company is sound. It deserves to be saved. Morgan channels $3 million to the trust company just before closing time. It survives. The panic begins to ease. But Morgan isn't done. The next crisis emerges. Moore and Schley, one of Wall Street's largest brokerage firms, is about to collapse. The firm borrowed heavily using shares of Tennessee Coal, Iron, and Railroad Company as collateral. The stock price is falling. If Moore and Schley fail, they'll be forced to liquidate and the stock market crashes again. Morgan has a solution. U.S. Steel, a company Morgan helped create just 6 years earlier, will acquire Tennessee Coal and Iron. This saves Moore and Schley. It prevents the stock market crash. But it also gives U.S. Steel, which Morgan controls, ownership of massive coal and iron reserves in the South. It's brilliant. Morgan uses the crisis to expand his steel empire while saving the financial system. 2 birds, 1 stone. President Roosevelt, who spent years railing against malefactors of wealth, has no choice but to approve the deal. Without it, the panic continues. Roosevelt gives his blessing. The panic of 1907 ends in mid-November. The financial system stabilizes, the economy begins to recover, and across America, J.P. Morgan is hailed as a hero, the man who saved the country, the patriot who stepped in when the government couldn't. Even Roosevelt reluctantly praises those influential and splendid businessmen who rescued the economy. But here's what most people didn't see. Morgan didn't just save the system, he proved something. He proved that America needed someone like him, someone who could coordinate the banks, someone who could force cooperation, someone who could act as a de facto central bank. And in proving that, Morgan made himself indispensable, the most powerful private banker in American history, the man without whom the financial system could not function. This was Morgan's ultimate trick. Every time there was a crisis, Morgan would rescue the economy, consolidate his power, and emerge stronger than before. Crisis wasn't his weakness. Crisis was his opportunity. Let me show you the pattern. 1895. The U.S. Treasury is running out of gold. The gold standard, which backs the dollar, is in danger of collapsing. If the gold reserve falls below 100 million, confidence in the dollar evaporates. Foreign investors will dump American securities. The economy crashes. Morgan forms a syndicate of bankers. They purchase $62 million in gold bonds from the government, supplying gold to restore the Treasury reserve. The deal saves the gold standard. It saves the dollar. It saves the economy. But Morgan and his syndicate make a profit. They buy the bonds at a discount, then resell them to investors at face value. Critics call it robbery. Morgan calls it business. More importantly, Morgan has now bailed out the U.S. government itself. The government owes him. This is leverage. 1901. Morgan creates the world's first billion-dollar corporation, United States Steel. Here's how it happens. Charles Schwab, president of Carnegie Steel, gives a speech at a dinner attended by New York's industrial and financial elite. Schwab describes a vision, a single steel company controlling the entire industry through economies of scale, advanced technology, vertical integration, one company to dominate the world's steel market. Morgan, sitting next to Schwab, listens carefully. And immediately after the dinner, Morgan pulls Schwab aside. "Let's do it," Morgan says. But first, Morgan needs to buy Carnegie Steel, the largest steel producer in America. Andrew Carnegie is 65 years old, thinking about retirement and philanthropy. Morgan approaches him. Carnegie writes his price on a slip of paper, $480 million. At the time, this is an incomprehensible sum. The entire federal government spent only $517 million that year. Morgan looks at the paper and doesn't hesitate. "I accept this price." Morgan then merges Carnegie Steel with Federal Steel, National Steel American Bridge, National Tube, and several other companies. The result is United States Steel Corporation, capitalized at $1.4 billion, the first billion-dollar company in history. U.S. Steel controls 67% of American steel production. Morgan controls U.S. Steel, which means Morgan controls the material that builds America's railroads, skyscrapers, bridges, warships, and factories. But it's not just steel. Morgan controls the railroads too. By 1902, Morgan controls approximately 5,000 miles of American railroads, about 1/6 of the entire rail network. If you ship goods in America, you're using Morgan's rails. If you build structures, you're using Morgan's steel. This is vertical integration on a scale never seen before. Morgan doesn't just own one industry, he owns the supply chain, the transportation, the production, the financing, everything. And this is where Morgan's true genius emerges, because owning companies isn't enough. Morgan creates a system of interlocking directorates. He places his partners and associates on the boards of dozens of companies. These directors report back to Morgan. They coordinate their decisions. They don't compete, they cooperate. Under Morgan's direction. By 1912, this system has grown to monstrous proportions. And that's when Congress decides to investigate. December 1912, the Pujo Committee hearings. Named after Congressman Arsène Pujo of Louisiana, the committee is investigating the existence of a money trust, a small group of Wall Street bankers who allegedly control American finance. Samuel Untermeyer, the committee's counsel, questions Morgan for hours on December 18th and 19th. The testimony is public. The press covers every word. And what emerges is shocking. The committee reveals that Morgan, along with just two other men, George F. Baker and James J. Stillman, controls $2.1 billion through 7 banks and trust companies. That's roughly $60 billion in today's money. But it gets worse. The committee finds that 341 officers of Morgan's firms and affiliated companies hold directorships in 112 corporations with aggregate resources exceeding $22 billion. That's over $600 billion today. Think about that. Through interlocking directorates, Morgan and his associates control corporations valued at more than the combined worth of all property in the 22 states west of the Mississippi River. The committee's report is devastating. It concludes that a small group of financiers has gained control of major manufacturing, transportation, mining, telecommunications, and financial markets of the United States. This isn't conspiracy theory. This is documented fact published by the United States Congress. During his testimony, Morgan is questioned about whether controlling credit means controlling money. Morgan's response is revealing. Untermeyer asks, "If you had control of all that represents the assets in the banks of New York, would you have the control of all the money?" Morgan answers, "No, you would not." "You would not." "No, sir, not in my opinion." This exchange becomes famous because Morgan is technically correct. Credit is not money, but credit is power, and Morgan controls credit, which means he controls what gets built, what gets bought, what succeeds, and what fails. Morgan is asked about character, about trust. He insists that credit is based on character, not collateral. A man of character can get credit even without assets. A man without character cannot get credit even with assets. This sounds noble. But it's also the ultimate expression of Morgan's power, because Morgan decides who has character. Morgan decides who gets credit. There's no objective standard, no transparency, no appeal, just Morgan's judgment. If Morgan trusts you, you get credit. If he doesn't, you're shut out of the financial system. Your business dies. Your fortune evaporates, and there's nothing you can do about it. This is power beyond wealth. This is the power to determine success and failure, to create or destroy fortunes with a word. The Pujo committee hearings create public outrage. Newspapers denounce the money trust. Progressive politicians demand action. And within a year, 2 major reforms are passed. First, the Federal Reserve Act of 1913. 8 months after Morgan's death in March 1913, President Woodrow Wilson signs the law creating the Federal Reserve System, a true central bank for the United States. Never again, the government promises, will the country need to rely on a private banker to rescue the financial system. Second, the Clayton Antitrust Act of 1914, designed to break up monopolies and restrict interlocking directorates, the exact system Morgan perfected. These reforms are supposed to end the money to prevent another J.P. Morgan from ever holding that much power again. But here's what actually happens. The system Morgan built doesn't die. It just gets renamed. The interlocking directorates become board memberships. The coordination becomes industry associations. The consolidation becomes mergers and acquisitions. And the power Morgan wielded personally becomes institutional power, wielded by banks, investment firms, and corporations. Morgan's firm, J.P. Morgan and Company, becomes J.P. Morgan Chase, one of the largest banks in the world in 2025. The companies Morgan organized, U.S. Steel, General Electric, continue for over a century. The Federal Reserve System, created to prevent private banker control, operates with former Goldman Sachs, Morgan Stanley, and Citigroup executives as Treasury secretaries and Fed officials. The system changed its face, but the structure remained. Financial power concentrated in the hands of a few institutions, interlocking boards still connecting major corporations, and credit still controlled by those at the top. Morgan died March 31st, 1913 in Rome, Italy. He was 75 years old. His estate was valued at $80 million. That's about $2.4 billion today. Substantial, but not close to the wealthiest Americans of his era. John D. Rockefeller was worth over $400 billion in inflation-adjusted terms. But here's the point. Morgan's power was never just about his personal wealth. It was about control, the ability to direct capital, to organize industries, to decide outcomes. When Morgan died, the newspapers eulogized him as the man who saved America multiple times, the patriot who stepped in when government failed, the giant of finance who built modern American industry. And all of that is true. But it's also true that Morgan used every crisis to expand his power, that he controlled an unprecedented share of American industry, that he decided who succeeded and who failed based on his personal judgment of character, that he operated in almost complete secrecy with no oversight, no accountability, and no democratic input. Morgan built a system where financial power trumped political power, where private decision-making shaped the entire economy, where one man or a small group of men could control industries, governments, and the financial system itself. And that system, refined and evolved, still exists today. The interlocking boards are still there. Check the directors of America's largest corporations. You'll find the same names appearing on multiple boards. The concentration of control is still there. 6 banks control most of America's financial assets. 3 investment firms, BlackRock, Vanguard, State Street, are major shareholders in virtually every public company. The power to create and destroy through credit is still there. Try starting a business without access to capital. Try buying a home without a mortgage. Try operating outside the banking system. You can't. You need the system. And the system decides whether to help you or not. This is Morgan's legacy. Not just the companies he created or the fortune he amassed, but the structure of power itself. The realization that he who controls credit controls everything. That financial architecture shapes economic reality. That private power, properly organized, can exceed public power. J.P. Morgan didn't conquer America with armies. He didn't win elections. He didn't pass laws. He simply understood money better than anyone else. He understood that in a capitalist system, capital is power, and he organized that capital more effectively than any single individual before or since. The banker who quietly took control of America wasn't loud. He didn't brag. He didn't seek publicity. He just systematically, methodically, brilliantly built a system where every major decision had to go through him. And by the time anyone realized what had happened, it was too late. Morgan's system was the system. And even after his death, even after the reforms, even after a century of change, the fundamental structure he created remains. Control the credit. Control everything. That was Morgan's insight. And that insight still rules America today.